What's really missing to attract more business is simply liquidity. That's a usual topic I'm coming across day in, day out from, mainly our US-based clients. I'm interested in trading Europe, right? I mean, maybe the US is looking a bit toppish. I would want to be involved in Europe, but how am I going to do it? How can I put on size? I look at Euro Stoxx and I trade a few thousand contracts and I'm moving it, right? How can I put in size in Europe? That's really the key question we're coming across.
What product requests are you seeing in the listed derivatives space?
With all the volatility obviously we're seeing in the market, instead of putting some size on in single stocks, obviously via dispersion, which still exists, but obviously speed is key, right? And this is where people get on their positioning via futures, right? Which is still the most liquid piece to trade, I would say. We're seeing a lot of inquiries there even from people who haven't traded futures before, right? But need to hedge, need to tail hedge their overall positions with a big market move just a Trump tweet away.
What is driving the growth of single stock volatility strategies?
We have zero DTE basically available for not just the Magnificent 10 or whatever you want to call it, but for a broad range of stocks. So people get involved and getting up the learning curve quickly. Still, if you want to trade size, right, there's nothing around index really. As a kind of a regime shift we're seeing right now in the market, trades out into AI, out of AI, back into the old kind of industries. A lot of clients are putting this on not via single stocks, but via index right now, right? Which I think is an interesting development. They want to be in fast but out fast as well, right? And if you have you do a portfolio trade of a bunch of stocks, it's hard to switch that around even within the day.
What liquidity and risk analysis tools are you currently developing?
What our main business is, on not cash side, right? Block facilities, super blocks. This is what we're actually trying to use this technology and to introduce it into the futures and options world as well, right? Whether that's pre-trade analysis when it comes to AI, when it comes to trading per se, whether that's algos, something synthetic, whether that's even merging kind of trades via roles, for example. You can think about doing something similar to our dark pool tools, for example, right? And post-trade obviously is as important.
What are the most practical applications for AI in derivatives trading?
It's happening already, right? I mean, whether that's algorithms that are fed with AI, whether that's pre-trade analysis. I remember even 5-6 years ago, right? I mean, the pre-trade analysis that we would be doing was so incredibly manual. I mean, AI can all scan that within a few seconds, even before you hit execute on a live order.
Is 24/7 trading in Europe constrained by technical limitations or market demand?
I don't see a reason why we shouldn't be able to do that or facilitate that, right? I mean, we obviously have to talk about risk management, especially over the weekend then, right? I mean, 24/5, you could probably do it and roll it around the globe via your hubs, right? But when it comes to the weekend, I think that's probably a bit tricky, but I don't see a reason why this shouldn't be possible, even in the near term. Attracting flow for Europe in particular, I think is a very valid point, because in the end we need to do something attracting flow in Europe, right, to catch up with the US, because the spread is just widening and widening, and maybe that's a good idea.
How well are retail and institutional flows currently interacting in the market?
I would say one attracts the other, right? I mean, obviously retail business in the US is incredible. I mean, you see the stats and you keep getting surprised over and over again, right? How much the retail sector can actually move things. That equally will attract institutions to trade. This could, again, in turn work well over the weekend as well. You have the retail sector that you attract because, they want to trade 24/7. They want to trade on a Saturday when they're out for beer or whatever. And, institutions will come in and, play with it.